Hey guys, welcome to the live. Guys, I don't say this lightly, but there's a trend happening in the real estate market as we speak that genuinely has me concerned. Inventory is rising fast and buyer demand, while it's also rising, is just not keeping up. And guys, that kind of imbalance can have real consequences for both buyers and sellers. So in today's video, I'm going to break down exactly what I'm seeing and why it matters, and ultimately what you should do if you're thinking about making a move this year. Now, guys, I tend to be just a little bit more pessimistic than most agents about the market, particularly because I want to be able to give you guys the insights that are actually true and backed by data. And I don't want to sit here and say, oh my gosh, if interest rates dive down, then the market's going to explode. And sure, I think there's a very real use case for that. But the reality is it's just not what I'm seeing. And I'm genuinely concerned about the state of the market and what prices may or may not do. And the concern is not just me saying this because I think something's going to... No, we're actually going to go through the data today, and I'm going to build and articulate exactly why I am concerned, what I'm seeing, and ultimately what you guys need to know as buyers and sellers to set yourselves up for success. Now, if you are new to the channel, welcome. Guys, you wouldn't believe how much a like or subscribe to this channel does for the support and growth. But ultimately, guys, the market is changing weekly, monthly, daily. And so every single week that's gone by in 2025 has added to my theory in being able to observe market trends to do these types of videos. And it's ever so changing. And so the ask for you to subscribe is more so you guys can stay up to date with the market and see what's happening. Now, without further ado, guys, let's dive in. I'm going to show you exactly what I'm seeing here and why it is important, why it matters, why I have a concern in today's market. Now, let's go here. All right, guys, you guys should be able to see my screen. It says dream big. Please do that. But also, this is the weekly market brief for March 25th. I'm going to read through this and also give you my take as I go through it. But before we do that, I want to show you specifically why I have a concern in today's market. Well, here's the concern. Weekly showings by year, really strong. 2021 and 2022 are these top lines, these green ones. This was the strongest showing activity we've seen in the history of the Denver market. What's good is buyer activity is pacing those years in the market. That's amazing. We need buyer demand to be that high. But here's where my concern is. Those amount of showings are spread out over so many listings that the actual showings per listing per week is right down here where I'm circling, as opposed to 21 and 22 up here. You can see a stark difference in the amount of showings per listing. And then we look at days on market, and you can see this gap here. And while days on market's coming down, it's higher than it was in 24, 23, 22, 21, and 2020. And the reason for that, guys, is because inventory is at all-time highs. Guys, this chart alone is where my concern lies. If we have inventory outpacing 2024 by this much already, my concern is what happens when we're in week 25, 29, 35, when we're seeing inventory at all-time highs seasonally, as it is most every year. If this gap continues and we have that much more inventory than last year of 2024, which, as you can see, this gap is how much more inventory we've had in comparison to the last 4 years. And so if we have a similar gap in 2025 when compared to 2024, I have some concerns in regard to what pricing is going to do. But let's read through this. I'll give you my thoughts, and things are going to really start making sense for you guys. If you have questions, you're joining live, please feel free to throw them in the chat. I will answer them. Let me know where you're coming from, and let me know your take on the market. If you think this is BS, or if you think there's something else going on that I might be missing, throw it in the comments. I'd love to hear your guys' perspective. Now let's dive in. The number of new properties hitting the market continues at a remarkable pace, reinforcing the notion of pent-up demand lingering from the past couple of years. Guys, the reality is a lot of people didn't sell, they didn't move, they didn't buy because interest rates were so high. And so we're starting to see those folks come to market, and we're seeing a remarkable pace of new homes hitting the market available for sale, inventory. And what we're saying is that reinforces our notion that there's pent-up demand lingering from the past couple of years. And while buyer activity remains robust, evidenced by steady home showings, declining days on market, and a surge in under contract properties that rival the busiest periods of 2021 and 22. That said, today's buyers are in a drastically different environment than in the past 5 years. Interest rates are higher. Inventory has increased significantly. And seller concessions, that's when you as a seller pay credit to the buyers, are still common. Although buyer activity is strong, the average number of showings per listing is quite low. That's what we went over early in the video, if you can remember. This creates added pressure on sellers to lower prices and gives buyers more negotiation power. It's too soon to label this as a mid-season shift, but early signs point to seller price reductions, an increased number of offers below asking price and seller concession, and a continued rise in inventory. Guys, here's the thing, right? So you could read this data and say, hey, the market's on fire. We have days on market going down. We have incredible buyer activity. We have a surge in under contract properties that rival the busiest periods of 2021 and 2022. And why that's important is under contract properties is a measurement of buyers actually active in the market, putting homes under contract. We look at that to gauge how hot or cold the market is. And right now it is hot. That is true. But there's so much more to the story, right? Days on market from when you put a sign in the yard to when you're going under contract is trending down. You are right in saying that. Agents are right in saying that, guys. But what the truth is that even though that is occurring, there's also a truth that is the days on market is still higher than it was last year, and the year before that, and the year before that, and the year before that. And so there's more to the picture than what the headlines might tell you, what other people might tell you. And that's why you come to my channel, to get the actual truth, to see what actually is happening in the market. Now, look, yes, the spring market is doing really, really well right now. But because there's so much more inventory than previous years, even though the market is hot, relatively speaking, it's still in a state where buyers have quite a bit of leverage. They have more negotiation power. And I think sellers, please follow along as we go through this report, because it's super, super, super important that you listen to what I'm about to tell you. I think there's a very, very, very real case scenario here that we could see pricing fall. I don't think it's going to be a crash. I don't think it's going to be a crisis. I don't think it's going to be some real estate bomb or the bubble bursting, maybe. But I think it's going to be gradual. I think people aren't going to really realize it's happening until, 2 to 3 years from now, when we look back and say, oh, yeah, this is what's been happening. And guys, I've already explained a lot of this in my videos over the past, and that's why I encourage you to subscribe so you can start building your knowledge before you go to make the move, whether you're buying or selling. Good thing about YouTube is you can listen to this on 2x. So what takes me 10 minutes to explain, you can listen to in 5. Showings per listing. With elevated interest rates, many observers expected a lull in buyer activity. Yet consider that rates jumped from about 3.5 to nearly 7% nearly 3 years ago. While rates remain high, continued strong buyer activity reflects significant pent-up demand. Guys, buyers are resilient. They realize the new normal is that 6 to 7%, and they're done waiting. And so that's why you're seeing this big, huge uptick right here in showing activity. Last week alone, we saw 28,445 home showings, more than double the same time last year. However, today's buyers are notably more selective. They're viewing numerous properties, negotiating firmly on price and terms, and walking away from contract when a property's condition doesn't measure up. And sellers are filling the competition of higher inventory through the number of times their home is viewed each week. While there are still experiences of multiple offers on exceptional properties in unique locations, By the way, hint, hint, I'm going to be launching a video this week of the top 5 most appreciating neighborhoods of 2024 in the real estate market. So be sure to watch that, because you're going to see where some of these unique locations are, where some of these homes might be getting multiple offers. So while there still experiences of multiple offers, many sellers are having to learn patience in this market that is yielding only 3 showings per week on average, only slightly above last year. Guys, in the thick of COVID, in the market where prices skyrocketed, we were at 12 to 16 showings a week, and we're at 3. So you can see the stark difference in between the markets. Days on market and concessions. Days on market continues to decline, which might seem like a fantastic news on the surface. However, it's important to note that more than half of the current inventory has come to the market in the last 3 weeks, naturally driving the average days on market downward. Historically, we tend to see days on market reach its lowest point around the end of April, then begin climbing toward the year's end as buyer activity slows and inventory acclimates. As of last week, average stood at 37 days. So here we are, right? And what we're saying here is that it's going to kind of peak. And this graph is inverse, right? So the peak is down here because that's the lowest days on market, and then it'll start climbing back up. Meanwhile, interest rates remain high and pricing remain high. Factors prompting buyers to seek ways to reduce closing costs and secure seller concessions to offset monthly payment burdens. The average seller concession per contract now sits at $6,500, which, guys, over the last 20 years, seller concessions averaged around $1,500 per contract. We're at $6,500 per contract. So sellers, be prepared. Buyers are likely going to ask for a concession because on average they are. It's just the way the market is, and they're asking on average a concession of $6,500. Inventory, guys, this is where my concern remains. So once we get through the last bit of this report, I am going to actually break down with just a little bit more clarity on why this is a concern and how this is actually impacting the market, and maybe what wave of a market shift we are seeing ourselves walking into that most people aren't telling you. So let's go over inventory. Higher inventory means more competition. And in any competitive environment, be it business or sports, competition drives excellence. Sellers who invest in proper home preparation and accurate pricing stand a much better chance of achieving a successful outcome in this shifting market. Guys, we're out of the market. We're pushing price, and you get not just that price, but 20, 30K more. Like, we're far gone from that market. Now is not the market to push price if it doesn't make sense. If your condition of home doesn't support that, but you're just like, let's just see what happens, and then we can always lower. Well, here you go, $50,000 less than you asked, and you're still lowering price. But guys, I can find you 5 examples in 5 minutes or less if we went on the MLS. So be sure to prep your home and price accurately. Last week, the number of available homes for sale hit 9,200 homes for sale. We were at 5,300 last year, 4,100 in 2023, and 2,200 in 2022. That's the gap here, guys. If this pace continues, inventory will likely exceed 13,000 homes by late September, barring any major shifts in the market. It's crucial for sellers to recognize that we're currently experiencing the best ratio of buyer activity to available inventory we'll likely see in 2025. And I'm sorry, let's get you guys this screen share. Here's the gap I was saying right here. Over the next 30 days, buyer interest typically eases while inventory builds. That shift leads to more price reductions, lower offers, and additional buyer-friendly contract terms as the year progresses. Let's get a drum roll. We got the weekly conclusion here, and then we're going to get into my thoughts and why I'm concerned about the market. Despite interest rates nearly doubling in the last 3 years, buyer demand remains strong. Buyers are out there. They're sick of these high rates, but they accept these high rates, and they're done waiting to move on to the next chapter in life. So the demand, it's there, evidenced by a surge in new listings, brisk showings, and numerous people going under contract. However, high rates, rising inventory, and expanding seller concessions have changed the market dynamic. Guys, that means buyers are negotiating harder. They take more time to explore properties, and they'll walk away from unfavorable deals. Sellers, if you want to capitalize on the moment, you have to price strategically and invest in strong preparation before the market shifts more firmly in buyers' favor. Guys, if you've stuck around this far, first off, thank you. Again, you wouldn't believe how much a like on the video, a comment down below, and or a subscribe to the channel does for us to be able to grow this channel, to be able to get this information out to more people. And guys, I've been doing this for 10 years. I've been licensed selling real estate for 10 years. I'm in the market every single day. And I think one of the unique things about working with me is you're going to get somebody who's a very, very, very high level professional, but also who understands the market. Because guys, I take the time to learn about the market. I take the time over years and years of doing this to understand what the market trends were 3 years ago, 5 years ago, today, and how they interact with each other and how the supply and demand actually inflicts change in the market, and how as a seller, based on market trends, you should price your house. And as a buyer, based on market trends, what we might or might not be able to get away with in negotiations. And so if you are interested in working with me, or buying or selling or transacting or investing in property here in Colorado, I would love to be a resource for you. Book a call down below, or my number is 303-332-1108, 303-332-1108. And guys, if you want the truth, you're going to get it from me. I'm going to tell you what I'm seeing out there. And so would love nothing more to support you. But guys, let's get into my concern. Here's the concern. I know what the market was like back here when inventory increased this much. I know what the market was like here when seasonal trends had very, very, very little buyer activity, yet we still had increased inventory. And so I know, based on these experiences, that if this inventory line keeps crawling up and we see any bit of decrease in buyer demand, showing demand right here, I know what that does to prices. I know how builders ratchet down their pricing and increase incentives to incentivize buyers to buy their homes. The reality is, pricing will have to come down in order to meet the market where it's at, in order for a transaction to occur. And so with that, my concern here is that if we get inventory to continue to rise at markedly high rates, we could be in a market where we see pricing on a downtrend. And I don't think that's something to necessarily be fearful of. It's just the reality. It's just something to understand and go, okay, cool. This is the reality. This is what could happen. And from my perspective, I personally think it's likely to happen. Now, I'm not an economist. I don't have a crystal ball. I'm not saying this is what's going to happen. I'm just saying, hey guys, here's a potential outcome of what we're seeing in market trends. And if market trends act in this way, this could happen. Now, what does that mean for you as a buyer and seller? Sellers, well, regardless of inventory and what I'm saying here, seasonally, best time to sell is anywhere in spring, starting really kind of middle of February to about end of April. The market typically kind of plateaus May, June-ish, and then it starts the downward trend all the way into December, as you can see with all these trends on this graph, right? And I could show you 10 more graphs that show the same trend. So seasonally, guys, sellers, like, you got to get in the game. If you're not in the game and inventory continues to rise, do not sell in October, in November, gosh, even August. It's likely not going to be a favorable market for you as a seller. So if you're looking to maximize price and you can help it, sometimes life circumstances don't allow for it. And I get it. At that point, you just got to do what's best for you. But if you can help it and you can time the market, generally you're not going to see favorable results Q3, Q4. The most favorable results are going to be Q1, Q2. As a buyer, the inverse is true, right? If sellers are going to have the most benefit Q1, Q2, you're going to have the most benefit Q3, Q4. And so as a buyer, here's the good thing, is that if we do see some downward pressure on pricing, well, then you're likely going to be able to get much more of a better deal, have much more leverage when it comes to negotiations, and have potentially even much more purchase price or purchase power when you go into the market if you are buying anytime between, I would say, July and December. Guys, every time October to December rolls around, I shout it from the rooftops. It's buying season. It's time to buy. It's time to get the best deal you possibly can through that yearly period, because just seasonally, that's the way the market works. Especially if we're going into a market where there's going to be higher than anticipated inventory and buyer demand that's just simply not keeping up pace. In that event, we should really start to see, again, some downward trends in pricing. I hope not for my homeowners, for my sellers. Gosh, even for buyers, you don't want the market to go that low. And I don't know that it's going to go that low, but I definitely think there's a very real possibility that we end the year over year with pricing having declined. But we shall see. I think the one thing that can stop that from happening and balance out these inventory levels is interest rates. If we see interest rates go anywhere close to probably, I don't know. There's going to be a threshold to where if rates get to that point, the market will get quite hot. As you can see, there's a ton of pent-up demand. So if we get rates somewhere in the 4s, very low 5s, the market could really change in a significant way, offset some of this inventory climb, and see pricing appreciate. And, that's a whole different conversation. Likely we'll do a video about that outcome, about that theory here soon. And so again, super important. You guys subscribe to the channel. That way you guys get up-to-date takes on the market, not just based on, what I heard on another YouTube channel or what I think because I just am in real estate and I should know all this. Guys, clearly it's backed by actual market trends, so that I'm not just telling you my thoughts. I'm reading what the market's doing factually based on data and telling you, articulating the data into what's actually happening. And so guys, again, I've been in the business 10 years, would love nothing more to support you. Thank you so much for the support on the channel. We are here for a long time, not a little time, and we're looking to grow. Thank you for your support. I'm out. Time to get to work. Appreciate you guys very much.